My name is KachingFx. Catch the move, Kashina. So today we are going to learn something here. Two things, that is liquidity and fair value gaps only. Forex trading. This is XAU gold. Once you open your charts, be it daily, be it weekly, be it monthly, be it 4 hours. So in this case, I'm using the 4-hour candle or the 4-hour chart, the time frame. Now, once you open your charts, then you check on the last leg or the last leg. The last leg either push up or the last leg down. Where is the key area? That is number one. You can still check for the directional of the market, so that as long as the markets maybe is buying or maybe selling us, but maybe you switch to a lower time frame, you know what to do. Now, I'm on a higher time frame. I'm on 4 hours. The next video I'll be doing weekly, daily. Remember, I've been doing it on TikTok and we have been milking them almost every week using the weekly candle, daily candle, even the 4-hour candle and everything. So I will start with the 4-hour, then the next video I'll be doing daily, another video weekly, another video just like on structures. But the major thing here we focus on is liquidity and gaps. Only two things. Because in forex trading, don't or never complicate. Just do it simple, keep it simple, and then you will like almost every time kaching. Kaching means hitting your take profit. Now, I check this particular market on this particular 4-hour. I check the last leg. This was an attempt. This was a swing, the last leg, to give me this particular push up. So I would check for the fair value gaps. If there is a gap, because the fair value gap is the only footprint of the big boys, that is the only indication this particular buyer is serious, still taking the market up. Now, I will check if there is a fair value gap. Number one, where was the journey started? The journey started, yes, maybe from this particular area, and there was a fair value gap, there was a gap, and there was a gap, and still a gap, and still a gap. Meaning a buyer is seriously, the intention is to take the market somewhere up somewhere, maybe on daily or weekly. They are up to something up there. Now, I'll not just like take the trades like anyhow, because here in forex trading, especially the highly volatile kind of pairs, you just jump in. If you're not careful, you will be making losses. So our strategy is around 72%. You can still check out in our website, the KachingFxofficial.com. Then check on us. Let's have a chat here and there. Now, so let me focus on the first fair value gap. I know the market is at key area. I know that. The market is at key area. The first thing, am I like looking to take a scalp or maybe to scalp? Or maybe to day trade, or maybe to swing trade or position trade? It depends. Now, for example, if I want to take some few pips from this particular fair value gap, number one, I open the higher time frame, then I check if the market's at key area. That is number one. Let the market be at the point of interest. POI, the point of interest. So now my point of interest is this particular fair value gap. There is a gap here. You count 3 candles, then a gap, 3 candles, a gap. So there is a gap here. There is a gap. We count 1, 2, 3. There is a gap here. There is another gap here. We count 1, 2, 3. There is a gap here. There is no gap here. Even if we count 1, 2, 3, there is no gap. Then here there is a gap. We count 1, 2, 3. There is a gap here. Now let me focus on this particular gap. So once the market taps into this particular gap, this particular 4-hour gap, you can use daily, monthly, whichever time frame. It's not a must be a gap, because in the next video, I think I will be explaining about the liquidity. Remember, after tapping this particular gap, there was a sweep on liquidity on the low, on this particular lows, on this particular trend line, liquidity, this area and this area, sweeping the liquidity and also tapping now into our point of interest, which is a fair value gap. Remember, the market sweeps the liquidity, jump on lower time frame for the sharp turn. Remember, the market taps into a key area, maybe order block, maybe medication block, maybe wherever block, whichever key area. Yeah, you jump on lower time frame for the confirmation. You don't just like take the trades. Now, This is a key area. This is a fair value gap, which is a 4-hour fair value gap. 4-hour fair FG. 4-hour fair value gap. Just a minute. 4-hour FG. Now, we switch to a lower time frame. Just a minute, because I don't know. Just a minute. 4-hour fair value gap. Now, so now we jump on lower time frame. Make sure the accuracy, very important. The accuracy, this one, the accuracy, yeah. Top of this particular candle in the bottom. Remember, for a fair value gap to be called maybe a legit, or maybe to confirm a fair value gap, there must be 3 candles, and one must be aggressive candle. So the aggressive candle is always number 2. Looking for a sell or looking for a buy. The aggressive candle, most of time, number 2. Now, so this is our fair value gap. This is our fair value gap now. Now we jump to a lower time frame. So now you can still use 15 minutes. You can still use 5. So me, I'll use 5. Let me go to 5 minutes for the sharp turn. Now I'm on 5 minutes. I wait for the market to tap my fair value gap. This was an attempt, but there was no tap. Meaning it's an inducement, it's like liquidity. You see the market sweeping the liquidity like this one towards your gap. This is our gap. Now there is a tap here. So once they tap it aggressively, don't buy, don't sell. They tap it aggressively, you relax, don't do anything. So once they tap into this particular aggressiveness and tapping this particular fair value gap, you wait for the market now to give you the opposite aggressive candle. They come with aggressive or a rejection candle, whichever candle, maybe a disrespect or a respect candle, no problem. So once they tap this particular key area of ours, this is our key area, this is our fair value gap, this one. This one is our 4-hour fair value gap. They tap, you wait for the market to tap into. So once they tap, don't buy, don't sell, just relax. So they tap it, do nothing. They give you now, you wait for the market to give you opposite aggressive candle. Once they give you opposite aggressive candle, be it green or blue, whichever color, as long as it's a buy candle for you. Now, as they give you this one, wait for another candle after that particular aggressive candle. So as they print this particular candle, if it's a small body, well and good. So they give you maybe this particular candle, let them leave behind a fair value gap. No fair value gap again, no entry, because fair value gap is most of time is our entry point. So there is no fair value gap on 5 minutes. So the market will be moving, yeah? The market, you will see the market moving. Today is on Sunday, so the market is not moving because today is on Sunday. But tomorrow on Monday, you'll see the market moving. So once they tap in this particular fair value gap, don't buy, don't sell. You wait. Now, you jump into 3 minutes because maybe you keep on checking. If you only have one machine, then you keep on checking 5, 3, 2, 1, 5, 3, 2, 1. Whichever comes first, which time frame is going to give you a fair value gap, then you jump in using that particular time frame. Because 5 minutes, there is nothing on 5 minutes, yeah? There is nothing here. There is no entry here on 5 minutes. There is aggressive candle. Yes, this is a blue aggressive candle. Yes, a buy candle. A buyer is interested taking the market up or the opposite direction. Yes, but there is no footprint of that particular big boy. Now, you switch to maybe you check 3 minutes. There is aggressive candle. Yes, still there is no entry because I want to find or I want to get my entry from this particular point. I don't want to take it from there or there. The market will already expensive. Now, there is aggressive candle, very nice, aggressive candle. You see, a disrespect candle, tapping into your key area on 3 minutes, then another aggressive opposite color. Now, as they tap this particular thing, remember this is a manipulative thing. It's a manipulation. Some of traders, you see them maybe calling it an inverted head and shoulder. This is a shoulder, this is a shoulder, this is a head, maybe waiting for the market to retest this particular shoulder before taking their buy from here. For me, I don't use maybe the inverted head and shoulder or maybe the head and shoulders, support and resistance and everything. I do like this is a manipulation, this is a sharp turn. Once they tap my key area, I wait for the opposite aggressive candle and this is aggressive candle. There is no fair value gap here. So again, there is no entry. Remember, inverted head and shoulder is waiting to take an entry from here. But me, I want to take my entry from somewhere here. When the market still, the price is still at the best, still cheap. Because here the market will be already expensive. You see, if I will be finding my entries from here up to where maybe you are taking your entries already 36 pips in profit. So I'll be finding my entries when the market still at the best price. Now, let me check 1 minute if there is an entry, because on 3 minutes there is nothing. On 1 minute, I see aggressive candle and a fair value gap. Are you seeing it? Aggressive sell, don't buy. Tapping into our key area, this is our key area. Tapping with this particular sell candle. Don't sell, don't buy. Wait for a buyer to come in. So this is a buyer showing the interest. Number one, that is a sign there was no gap here, no entry. Another aggressive candle, you wait. Aggressive candle, don't buy, don't sell. Wait for another candle after that particular aggressive candle. So this is the candle, this particular red candle. You see this particular red candle, this one, this is our now third candle. Aggressive candle always number two, most of time number two. Then this one, because I'm looking for a buy. Are you seeing a nice fair value gap in the comment section? Are you seeing a nice fair value gap in the comment section? Yes or no in the comment section. So this is our fair value gap. Let me delete now the 4-hour fair value gap. Let me delete it now. I delete it. Are you seeing now a fair value gap and also an inverse of this particular fair value gap? So there is a fair value gap here and there is an inverse. That is a confluence, very strong confluence. There is an inverse and there is another fair value gap. So you wait for this particular candle as they tap in this particular fair value gap. Now you jump in, you take your buy immediately from this particular area. Don't wait. Oh, let me wait for the rejection. Let me wait and wait. As they tap it, whatever place, jump in. You can still wait maybe for equilibrium maybe, but just jump in. As they tap, go in. Either your stop loss, either below the leg or some few pips. I like doing it, some few pips below the aggressive candle. Then you will take profit. Do this particular last swing because they can still go down for the last time maybe, or they can still continue going down. So this is our last swing that gave us a tap. So take your first take profit. Do your first take take profit as this particular area as your first take profit. They tap this one as your first take profit. Or you do this particular liquidity, but for me, I like doing it the nearest swing as my first take profit. The second take profit or whichever take profit, do this. Go back to 4 hours. That is your analysis time frame. Go back to 4 hours. Then you can see target either this particular up around 500 pips from somewhere up to somewhere there, which is around 300 pips, or you go on 15 minutes and check whether there is an a key area somewhere so that you target as your take profit, maybe take profit 2 or maybe the final one, or maybe you target this particular liquidity, or maybe you target such a kind of areas as your take profit. Your entries here, maybe you target such a kind of area on 15, which is around 182 pips, or maybe you target such a kind of areas like this particular liquidity on that particular 15 minutes, which is 254 pips. So now let's go back to our entry zone, which is a 1 minute time frame, or you can see target the nearest liquidity, maybe wherever. You see, after the market tapping into, you see the market gave us around there. How many pips? The market already in profit around that place, which is 100, more than 130 pips in profit. So you see the market still giving us fair value gaps. The arguments we're still going up. You see giving us fair value gaps at the argument, the market's going up. You can still maybe break even, maybe, and then hold that particular market, or just leave the stop loss wherever it is, and then you ka-ching. So that is how we normally do it at KachingFx. We only wait for the market to sweep the liquidity and give us a sharp turn. For the sell, the same thing. I'll do the sell video again. The same thing. I'll do the 4-hour candle. I'll do again the weekly candle that we have been milking the market almost every week. Doing the weekly candle, so we're doing the monthly, doing the daily, and everything. I'll be doing it in the next video. Make sure you subscribe. Make sure you like. Make sure you share. And follow KachingFx also in our check our website, that is KachingFxofficial.com. The AI scanner is coming in very soon. Let's meet in the next video. My name is KachingFx. Catch the move, cash in liquidity and fair value gap. As they sweep the liquidity, sharp turn, wait for aggressive candle, wait for a fair value gap. As they tap into, jump in, catching.